Good afternoon. I'm Garriock, Design and Innovation Director at Experian. This afternoon's session we'll be looking at how data is transforming the mortgage market at this point. Bit of an outline in terms of what we're going to look at in this session is really understanding a little bit more about jobs to be done for those that exist within the ecosystem around mortgages. What we see is some of the issues in the customer journey, but also in terms of how changing expectations are really starting to shape the direction in terms of where we're travelling. But more importantly, to really start to look at some real life examples in terms of the data capabilities that are available in market today to really start to drive change across the industry. It maybe be remiss of me not to start by talking about the elephant in the room, or almost the reason why we are not in the room today doing this face to face. And obviously from a pandemic perspective, we've seen some relatively significant impacts in terms of the industry, from kind of initial lockdown where effectively things did shut down, to being in that space where we continue through the summer months and now into kind of early autumn, to be in this space where the bounce that we're seeing in the market is quite significant. I think the challenge is, from our perspective, is very much about how sustainable this actually is. And I think that the reality is that what we're seeing is really the stimulus from a government perspective, the pent-up demand that's been sitting there within the market, as well as really just being in a place where we've got to compete against things that were very much in train, alongside this kind of reassessment by consumers, which is probably the most important or interesting aspect, I think, that plays out of the pandemic so far into the mortgage market, is people start to reassess what their living requirements are and what the future holds for them. And I think that if we do see sustained growth in the market over the next 6 to 12 months, that's likely to be one of the key drivers in terms of where it takes us. If we move on then and start to look at, well, what are we seeing within the kind of marketplace? And I think that there's different elements in terms of how we can look at this. But for me, I kind of try to normally look at this through these four kind of core lenses, and we've added then a fifth lens here around COVID. But to me, the biggest challenge that still exists in financial services today is around execution risk. Ultimately, companies fail to deliver change because they haven't got robust processes around how they deliver and execute the innovation and other ideas and things that are out there that organisations want to do. And there's a big challenge within our industry, particularly about how you evolve. So we've been talking about change probably for the last 10 years and how digitisation and data is really going to start to change the market. But it really hasn't at this point in time. I think it's starting to, but there's a big opportunity, I think, for organisations to really focus on how they deliver change going forward. And a lot of that then kind of plays into the next point around dealing with regulation. Because of the amount of change that comes to us as organisations to stay in business from a kind of business as usual perspective, it tends to swallow up an awful lot of the budget that people are looking to invest in innovation and to improve customer experience and remove cost and such. But we get caught up in having to deal with this kind of ever-changing set of requirements that comes from the regulator. Whilst at the same time, the big focus is around, at the moment, how do we reduce cost? That was true before the crisis, it's true now, and it will be going forward. Whilst really then focusing on around how do we drive sales conversion within our businesses and cross-sale. I think one of the big challenges that we see is around how do you start to drive additional value out of the relationship beyond the mortgage. And I think from a broker perspective, you've obviously got lots of cross-sale opportunities that you're looking to maximise. I think on the lender side, it's looking and saying, how do we really deepen that share of wallet to maximise the opportunity that we've got here, and also what we're paying for in terms of this business that's being originated. If we put then a COVID lens on, there's obviously been a lot of challenges across the industry about moving to remote working. A lot of the mortgage processing in the industry in the UK is offshored, and it's not possible to then operate in a kind of fully secure environment if you immediately moved all your workers to working in a from home basis. So as a result, there's been some challenges that people have had to work through, as well as dealing with new regulations or processes around payment holidays, and how do you then start to assess risk in this new world where some of the information around people that are taking these payment holidays isn't readily available. So a lot of challenges there for lenders particularly to get their heads around and to deal with. We've then seen quite a lot of focus moving now to retention, and how do you protect both your back book but also the throughput of products or people that are rolling off of fixed term products, whilst having another eye then in terms of what is the impairment exposure that we're looking at. What does our collections process look like? How robust is that? We've maybe not revisited that for a number of years because it's not been a problem. And at the same time, everybody's starting to come back almost to these other 4 points and start to assess what do we need to do to accelerate digital transformation across our business. What we've been doing from an Experian perspective is we've been looking at the mortgage market over the last couple of years. You'll be aware, no doubt, that we made a significant investment in L&C a few years back, as we see the opportunity within this marketplace to really drive significant change through the use of data. And from some of the research that we've done probably over the last 12 to 18 months, the kind of recurring themes that kind of play through from some of the key players that we see in this market is that if you take the aggregators, their big challenges around poor conversion into mortgages from what they do. There's inconsistency that they have to deal with around the questions that lenders are asking across the board. There isn't a kind of standard within the industry around what information wants to be gathered. And then there's this push from the consumer that as they engage with the aggregator, they're really looking for total independence. I think from a broker perspective, a lot of feedback around improving appointment quality. They don't lead to business. So how can you optimize and ensure that the people that you're spending your time with are going to result in quality business being processed? And I think the same recurring challenge around the inconsistency in lender data requests and processes creates a challenge within the industry about how you have to flex depending on the different lenders that you're placing business with. And with that comes a huge overhead in terms of administration time. From a lender perspective, high cost to serve, lots of processing inefficiency, and relatively poor penetration of their existing customer bases. So they've got these big customer bases for a lot of the big lenders, but when you actually look at the number of customers within those databases that actually are holding their mortgage with their kind of primary banking provider, it's not a fantastic conversion rate. So big opportunity for them to kind of address that. First time buyers, and you start to kind of move across this different requirements from different consumers depending on the stage that they're in. First time buyers primarily focused on the property rather than the financial aspects of it. They find lots of complexity across all the different parties. And they're also very conscious around affordability because it's taken them so long now to actually get onto the housing ladder, as it were. For people that are moving, they're predominantly focused around the monthly cost, looking for the best deal, but within that, contradicting priorities. I want the assurance of that fixed low-cost monthly fee for as long as possible, which would dictate maybe a 5 or a 10-year fixed, but the majority of them then opting for a 2-year fixed in historically low period or low interest periods. So some of these things are a little bit counterintuitive in terms of what they tell us. And then from a remortgager perspective, people just aren't sure where to go to start the actual remortgaging process. And for them, a lot of it's about the ease of effort in changing and being in this space where they really want to repay quicker. A lot of these challenges then play through into the mortgage journey. Ultimately, the path to purchase is broken due to the lack of capabilities that exist currently in the marketplace here, and ultimately it just plays into being a big paper chase. As we look across it, we kind of see a poor customer experience ultimately that's too long, there's no personalisation, there's no ability if they're doing it digitally to stop and come back from a kind of save and return perspective, onerous processes around identity, too much data capture, and then inherent inaccuracy or disbelief of the information that's been gathered, and then having to go through multiple proof points with the lender as they go through the underwriting process to validate the information that's been provided is actually correct. There's just too many checks, high levels of referral, and lots of manual intervention to effectively get to the end point. Ultimately, challenges around delaying release of funds, the risk processes and security are relatively challenging. And from a lender perspective, lots of legacy decisioning constraints because we're used to dealing with it in a certain way, and we've not got the ability to adapt and flex our processes quickly because of some of the legacy constraints that we've got within the business. And also, if you then kind of compare it to some of the other digital solutions that exist in market, it's this kind of multivariant type testing approach that you would ideally take with a lot of your other products just isn't possible in the mortgage market at this point in time. And as we take customers through it, one of the big pieces of feedback that we got from consumers when we were testing was that after having gone through that process, they didn't really feel that they'd built a relationship with either the broker or the lender, even though you'd been in a place where you'd helped them secure possibly one of the biggest financial purchases of their life. And I think that, to me, that's a massive opportunity lost. And it's not to say that that's everybody doing it, but I think in terms of our research, a real kind of big focus that is a gap or opportunity that kind of plays through for everyone to look at. If you then start to look at what we see as some of the opportunities that start to play through as we start to digitize and better use data and insight, we believe that starts to allow your business to operate at a far better speed and to operate faster at scale, depending on really the kind of culture within your business, if it's focused on execution. And ultimately, it's about driving the customer at the centre of everything that you're doing from a decision perspective to really try and improve that process for them. In my mind, it's starting to kind of look at the experience that you're delivering as an organisation becomes the product. Instead of looking at what we're doing here is we're creating this mortgage product that's going to be offered through brokers and aggregators and other channels or direct or through our own branch networks and such. It's stepping back and saying, look, what we're actually selling here is the best customer experience for opening a mortgage. And I think that the organisations that take that viewpoint will be the ones that win. And I think that then plays into this kind of theory around, up until now, the winners have been the people that have maybe been big or have been able to do things on a larger scale versus the smaller players. Whereas I think we move now into an environment which is going to be more focused around the people that can move quickly, or the fast versus the slow will kind of dictate where we see the winners over the next sort of 5 or 10 years in this marketplace. Ultimately, the mortgage market's changing today. Consumers' needs are dramatically different to where they were when platforms, decisioning systems and sales processes were developed. When we look at the home ownership challenge, if you go back 20 years ago, the majority of first-time buyers were between 25 and 35, whereas now they only represent maybe a third of the marketplace, because people just can't afford primarily to live where they work. But even when they look at living close to home, a 10% deposit to put down on a house in the past was maybe a third of your annual income, whereas now it's closer to 80%. So there's a lot of challenge there. I think we alluded to earlier the fact that we're seeing change in the market from a COVID perspective, where people are starting to look at options outside cities as they look at remote working and such, and really start to challenge where they want to live. Alongside that, we're redefining the mortgage experience through some of the challengers and fintechs that have entered the market over the last 4 or 5 years. Those guys are raising the bar, but I think it's understanding that consumers' expectations over the next 5 years aren't going to stay static. We've seen massive jumps in some areas around digital adoption through the pandemic, and I think you'll see an acceleration of that over the next few years as people really start to look for the benefits and the ease of digital interaction. And I think that creates a challenge for the mortgage industry at this point in time to step up and start looking at how do we do that? To kind of almost kind of frame some of the things that we see starting to shape the next 5 years, which will kind of play out over time, is that we're in the early stages of 5G rollout, which gives you the ability to deliver content instantly to an individual. You've got the early stages of quantum computers starting to roll out, and to kind of put quantum computing into context, it's millions of times faster than current supercomputers. So the ability to take massive amounts of data and information about an individual and start to build really amazing experiences is in the realms of possibility. And it's not to say that that's going to happen tomorrow, but I think it's on the horizon and we start to move to that. We've seen the rise of these virtual assistants in terms of the speakers that are in lots of people's homes now. But when you start to then add big data and AI into the context of that, it's reasonable to expect people to be interacting with them, to start to be doing bigger and more complex transactions going forward. And that plays to this kind of voice and gesture control, starting to replace keyboards as a kind of interaction point. Humans were designed with one mouth and two ears, and that's our primary interface. So I think technology over the next 5 to 10 years starts to evolve to be in a place where it really supports interaction on that level. And I think that creates lots of challenges to the way that we've built digital journeys up until now. But we need to consider in terms of future proofing, so we don't need to go through some of the pain that we've gone from evolving from paper to digital forms as we start to move into kind of voice interaction. And I think from a consumer perspective, things like Netflix and Amazon Prime have really shaped what our expectations are around how we consume media. And over the coming years, things like augmented reality and such are going to start to create far more immersive experiences. And I think that these challenges, whilst they're sitting out there as the future, start to give you an indication maybe of the fact that we're going to constantly evolve. There is no finish line in the kind of the Nike advert context. And I think in mortgages, we really face into that challenge about the need to evolve is now. When I look at this in terms of what are some of the core elements of infrastructure that we require, it starts with being in that space where we've got omni-channel capability, where we can orchestrate customer interactions across any touch point to really play to delivering the best possible experience for that individual, but being in a place where it can be orchestrated for that individual rather than it being a linear process that was designed for all and tends to only fit maybe 10 or 15% of your customer base. You need to be building journeys that have got multiple paths through them to address different requirements. And that might be as simple as single to joint or self-employed customers to employed customers. But typically what we tend to see at the moment is that as soon as you start to add some of these complexities, some of these digital processes fall over quite quickly. So getting the orchestration and the omni-channel piece of it is really important. It needs to be API driven and modular so that you've got the ability to kind of build these different journeys as we talk about it. You need to be playing in open data, which we believe is really starting to be more widely adopted as consumers and businesses start to understand the value that it can bring. The other piece that sits alongside that is within this digital age, consumers' expectation of getting a hyper-personalised product and communication and experience very much sits at the heart of what they're looking to do. So there's a number of factors here in terms of delivering this great mortgage journey. If I look across the UK at the moment, it's hard to see anybody that's really knocking it out the park in this context. I think when you look around the globe, one of the kind of standout organisations for me is an organisation or a lender that we're working with in North America, Rocket Mortgages, who are using a lot of this technology that I've kind of alluded to there, in really delivering great customer experience. But alongside that, what they're seeing as an organisation is really being in a place where they've been able to grow their market share significantly over recent years, delivering great customer satisfaction. They're not competing on rate, but they are being in a place where their conversion rates are continuously improving through their focus very much in terms of improving the customer journey. And a lot of that's just driven from that customer understanding of, look, this is a challenging purchase for people to make, and they're predominantly focused on buying the home rather than being in a place where they want a mortgage per se. And I think the challenge for us as an industry is about how we best serve those consumers to get the type of journey that they're looking for. If we then come to the UK and start to look at, well, what are we doing and what's available today that can really start to make a real impact and change and improvement in that customer journey? One of the areas that we've focused in on early on in this process was around customer eligibility. Our research had shown that there's high levels of anxiety for consumers as they started to think about applying for a mortgage. Lots of uncertainty about whether or not they'd be accepted. And we built with lenders in the first instance capabilities on their websites and in their branches to give customers that early indication around their eligibility. We've been fortunate in the last year or two to have then built that capability out, working with brokers and platform providers to bring that to the kind of the wider marketplace, so that we can give customers that early level of assurance around acceptance. And I think that that's making a real difference for consumers as they start into the process. But ultimately, as they then step into that originations process, it's still a very heavily paper and manual based interaction, which can take a lot of time, and there's obviously a lot of associated cost that sits with that. What we've been looking at, working with providers like Sopra Banking and such, is about how we can bring data into that process and really eliminate a lot of that pain, not just for customers, but for brokers and for lenders, by creating almost a kind of data depository using our kind of open data platform, where all of the information required can be pre-populated where possible, but also kind of brought into that environment so that we can provide the provenance for the lender then in terms of that information and the accuracy of it, which then starts to have knock-on impacts in terms of processing, underwriting, and timeframes, because there's a greater level of confidence around that information that plays through. When we've looked at that with brokers and lenders, we see a massive opportunity to strip out cost, up to 75% in some cases, across admin, underwriting and broker processes, to really start to deliver value to the businesses that are serving consumers, but at the same time it dramatically is improving the journey. One of the key factors within that journey is around using open banking data. Within the UK, we kind of champion our affordability passport capability. We made that available to the entire marketplace at the start of the pandemic for free for 3 months to allow people to kind of test and learn with it. But ultimately what it's doing is it's bringing verified bank statement information and bureau information around liabilities and such all into one place in the matter of minutes, with the customer's consent to kind of drive that process. So typically we would send an email to a customer explaining the process to them. They agree to proceed. We take them through an identity and verification process. They then provide their consent to enter into this data sharing interaction. And then from there, we take them through the kind of standard login procedures with their lender to be in a place where we then bring that data back to build a full picture of their income and expenditure position, but alongside that, the liabilities that they have from a financial perspective, to start to create a significant chunk of what would be a advisor fact find, and a lot of the information that would be required for an application process and we can do that in a matter of minutes. And it's making a real big impact in terms of digital journeys for advisors and lenders already in the UK. What we've been working on in recent weeks is working with the team at L&G Mortgage Club, looking at how we could create an open banking statement in lieu of bank statements, so that you could take a customer through this type of process when you're with them, whether that's virtually or kind of real time, and create something that lenders would then accept, instead of making a customer kind of go through the extra hassles of providing bank statements and such after the meeting. So there's a lot of opportunity at the moment to really start to drive a lot of value into the process using some of these solutions. I think the other challenge is about, from a lending perspective, that these are available in market today, and given some of the blind spots that exist currently because of the pandemic, it seems only sensible that people should be using this type of solution to really ensure that we're driving the best outcome both for businesses but also for end consumers. One of the key factors for us in that is around data categorization. We spent a lot of time and effort over the last 3 or 4 years in developing out and making significant investments and acquisitions in this space to be in a place where we deliver best in class understanding of that data. When you start to look at that as it rolls out and is looked at on a kind of en masse basis, you can then start to look at things at a portfolio level, which is massively powerful in terms of the insight that you can take, but also in terms of the understanding that you can build as an organisation about the customer base that you're serving. Whilst again recognising, to the earlier point about different options in the way to consume, that we can build this in a way, whether it's batch or cloud or dashboard type approaches, that's fit for purpose for your organisation. I think the other thing that I would kind of touch on here is that we talked about retention earlier on in this session, and a lot of the feedback that we've had is that retention is a real kind of hot topic at the moment, about how do organisations better work with their customers and build out that relationship with them and give them the right information at the right time to make the decisions that they're looking to make in this mortgage space. And we've recently launched at a kind of MVP level this mortgage monitor capability, which is very much about helping consumers understand what their options are as they come to the end of a product life, whilst being in a position where it gives the lender the opportunity to show how competitive they remain in market to retain that business. And we're seeing a lot of interest now coming in to look at this type of solution set to drive retention. Ultimately, across the entire customer lifecycle, there's massive opportunities for better use of data and analytics to really deliver value across the organisation. From an Experian perspective, we've made significant investments over the last decade around data science to give that predictive power, and what we're starting to see is that rolling out into some of our kind of core decisioning capabilities in market as we switch to kind of cloud-based consumption of them to really support lenders make better decisions, but also to take a better view analytically across their business as to all the different touch points that are relevant for kind of driving the best possible value for customers, but at the same time protecting and managing the risk within appetite within their organisation. So I think in closing, there's a massive opportunity across the mortgage ecosystem to really look at the opportunities that high quality, accurate data can start to bring to your business, whether that's in the early stages around helping customers understand their eligibility for products, or whether it's in the context of really starting to eliminate some of the costs and friction that exists within the existing customer journey at this point in time for mortgages. But also equally, if you extend that out, that there's opportunities in areas such as mortgage collections and such to get a better understanding of income and expenditure using some of these tools and such as well. So lots to consider. And I just like to thank you all for your time and for your attention over this past half hour. Thank you again.